New Zealand, a rock in a stormy sea. The world can be a messy place, economically speaking. One minute things are booming, the next they're tanking faster than a crypto bro's portfolio after Elon Musk tweets a fart emoji. But amidst all this chaos, there's a little island nation in the South Pacific that's been quietly killing it, New Zealand. Now, I know what you're thinking, John, isn't that the place with the hobbits and the sheep? And yes, while New Zealand does have more sheep than people, a fact they're oddly proud of, it also boasts a remarkably resilient and stable economy. Think of it like this: if the global economy was a rickety pirate ship sailing through a hurricane, New Zealand would be the sturdy rubber ducky bobbing along happily in its wake. It's not immune to the occasional splash, mind you, but it's built to weather the storm. So how does New Zealand do it? Well, grab a glass of Sauvignon Blanc, another thing they're annoyingly good at, and let's break it down. Growing strong, the Kiwi economy's engine. To understand how stable an economy is, you gotta look at its GDP, which is basically a measure of how much stuff a country produces and sells. And New Zealand's GDP has been growing steadily for years, like a well-tended kiwi vine. Now, this growth isn't fueled by just one thing, it's a team effort, with agriculture, tourism, and even technology all playing their part. They've got the whole, don't put all your eggs in one basket thing down pat. Think of it like a delicious pavlova, another New Zealand specialty. You see the pattern here. You've got your base of agriculture, the creamy sweetness of tourism, and the tangy fruit of tech on top. It's a recipe for economic success. Jobs for all, navigating the labor market. A strong economy isn't just about making money, it's about making sure people have jobs so they can actually, afford to live. And New Zealand has done a pretty good job on that front too. Their unemployment rate is currently pretty low, hovering around a level that economists consider healthy. This means that most Kiwis who want a job can find one, which is more than can be said for some other countries I could mention. Cough, America, cough. But it's not all sunshine and rainbows in the job market. Like any country, New Zealand faces challenges like wage stagnation and a skills shortage in certain sectors. It's like trying to find a good plumber. They're out there, but they're in high demand. Section 4. The price of money, interest rates, and their impact. Now let's talk about interest rates, the bane of anyone who's ever had a student loan or a mortgage. Basically, interest rates are like the price you pay to borrow money. New Zealand's central bank, the Reserve Bank of New Zealand, or rbnz, is responsible for setting these rates. They're like the economy's parents, trying to find that sweet spot between encouraging growth and keeping inflation in check. Sometimes they get it right, sometimes they miss the mark. Recently, they've been raising interest rates to combat inflation, which is like trying to put out a fire with a garden hose. It might work eventually, but it's going to be a bumpy ride. Section 5. The inflation puzzle. Keeping prices in check. Speaking of inflation, it's been a bit of a buzzkill lately, not just in New Zealand, but around the world. It's like that friend who always eats the last slice of pizza. Nobody likes it. But it's a reality we have to deal with. For regular folks, inflation means things get more expensive, which sucks. For the government, it means they need to find ways to bring prices down without tanking the entire economy, which is like trying to perform brain surgery on a unicycle while juggling chainsaws. New Zealand has been trying various tactics to combat inflation, like tightening the money supply and providing some targeted financial relief. It's a work in progress, but hey, at least they're trying. Section 6. In debt we trust, managing New Zealand's liabilities. Now, no discussion about an economy would be complete without mentioning debt. Just like your irresponsible friend who's always borrowing $20, countries have debt too. New Zealand's debt-to-GDP ratio, which is a measure of how much debt they have compared to their economy, is actually pretty reasonable compared to other developed countries. It's like comparing your friend's $20 debt to the national debt of a small island nation. This means they're not drowning in debt, looking at you, Greece. But they do need to keep an eye on it. It's like having a credit card. It's fine to use it responsibly, but maxing it out every month is a recipe for disaster. Section 7. Trading our way to prosperity, global connections, and domestic strength. Finally, no country is an island, economically speaking, except maybe actual islands like New Zealand. They're all part of a global web of trade, buying and selling goods and services to each other. New Zealand is no exception. They're big exporters of agricultural products like dairy and meat, as well as tourism. This means their economy is dependent on other countries buying their stuff, which can be a bit risky if there's a global downturn. However, they've also been diversifying their economy, investing in sectors like technology and renewable energy, It's like having a backup plan, just in case the world suddenly decides it doesn't need any more kiwi fruit. So there you have it, a whirlwind tour of New Zealand's surprisingly resilient economy. They've got their challenges, just like everyone else, but they've also got a lot going for them. A diverse economy, a skilled workforce, and a government that's not afraid to take action, sometimes. It's like that friend who always seems to have their life together, even when everything's going wrong. You might be a little bit jealous, but you also gotta admire their ability to keep calm and carry on, even when the world's going to hell in a handbasket. And that's something worth raising a glass of Sauvignon Blanc to. Cheers, New Zealand.